Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll. What we do here is break down the latest from the NDPSR report. Let's start this week with butter. This butter number coming in at 262.30. That's a plus 11 to the CME 1 week average of 251.58. The CME average was down 11 cents. Here on the NDPSR, almost 14 cents. So a little bit of a contraction week to week in butter basis. However, plus 11, well over our expected 2-cent positive basis. We traded 6 loads on the CME last week. Even with that meager volume on the CME last week, the NDPSR is able to post a sales volume north of 3.8 million pounds. So really good volume on the NDPSR. This CME weekly average of 251.58 represents the low week at the CME. Since then, butter prices have rebounded a little bit. It'll be interesting to see if on the bounce at the CME, if this basis continues to contract. Up next is our 2 varieties of cheese. Let's start with the block. 167.40. That represents a plus 5 to the CME 1 week average of 162.20. We traded 14 loads last week at the CME. So pretty good volume at the CME. Really nice volume here on the NDPSR, north of 12.6 million pounds. So after a few months of significantly lower than expected volume on the NDPSR, here the blocks have surpassed the expected volume 4 out of the 5 past few weeks. So volumes and sales volume surpassing expectations here as of late, as prices have come back into what would appear to be the end user wheelhouse. On that big volume, the manufacturer was still able to call a plus 5 basis. So I'd have to call it 2 for 2, a win for the manufacturer on both sales price and sales volume. In barrels, 162.55. That represents a plus 6 to the CME 2 week average of 156.74. And to come up with that 156.74, of course, we're using the first week down in the high 40s. So barrel prices at the CME kind of dropped lower. That weekly average to get to the 156.74 is down 6. Here on the NDPSR, looks like prices are keeping pace. So even on the decline, you would expect higher than normal basis. And I guess technically you could call plus 6 higher than normal basis, as it is at the high end of the 4 to 6 cent positive basis that we would expect. But I was expecting a little bit higher. It looks like the manufacturer chose to take volume rather than high price. This is a big volume, 15,282,000 pounds. So higher than expected volume, almost 2 million over our expected 13.5 million pound sales level. And the manufacturer accepted, well, let's call it a little bit lower than expected sales price, but still nothing to sneeze at. So in both blocks and barrels, I'd have to call it a win for the manufacturer, as the sales prices were respectable, and most importantly, they were able to clear a lot of weight. In whey, another surprise on this week's report, 41.22. That's basically parity with the CME 1 week average of 41.20. But what we're looking at here in whey, of course, is the November 18th NDPSR price, which is right around that 39 cent level. So the manufacturer was able to call almost a 2-cent premium over prior week's NDPSR, and you would expect that on previously contracted sales. But here with our sales volume at almost 5.3 million pounds, the manufacturer was able to call a premium on sales outside of contract, in addition to end users taking what would appear to be the full allotment of previously contracted sales. So I'd have to call it a win. I thought we were getting toppy last week at the NDPSR level of 40.45. Here we're able to gain almost 3/4 of a penny on top of that and move almost 5.3 million pounds. So really nice price in whey, and higher than expected sales volume. And then lastly, non-fat 119.46. That's a -1 to the CME 1-week average of 120.65. So end users rejecting prices north of 120. And as prices have come off a little bit from last week's level, sales rebounded almost 18 million pounds. So that's pretty respectable sales volume, albeit at a lower than expected price. One lower is certainly well below our expected 2-cent positive basis. So this is week 1 of 5 for the December pricing cycle. Currently getting December class 3 at 16.34, December class 4 at 19.27. If you carry current CME equivalents out through the 4-week January pricing cycle, getting a January class 3 of 16.60 and a January class 4 of 18.75. We'll see what they have in store for us in the weeks to come. Until then, I'm Joe. On behalf of Paige and the entire EverAg Insights team, thanks so much. Bye.